All right, good afternoon, everyone. It's 12:08 p.m. Eastern Time. It's August 21st, 2022. So right now what you can see here is the chart of the S&P. S&P futures. Last week we had a down day, minus 1.28%, while Bitcoin was down minus 9.02%. The S&P had a pretty decent rally off this wave 1, 2, 3 setup, which was something that I did not recognize fast enough or early enough. But if we can just look at where we are right now, you can see that price has run up to basically resistance. Okay, now this line that I drew is something that everybody can draw, but moving averages seem to be a bit better in terms of modeling. Okay, so we have right here being displayed the 6-day moving average in the green dots, the 8-day moving average in the blue line. The orange one is representing the 21, the red one is representing the 200-day moving average, and the white is representing the 50. Now, technically speaking, the S&P is still in a bear market because it's trading under the 200-day moving average. It's had an amazing rally up to that point, and on Friday it's actually broke through the 6 and the 8, now opening up a possible move down to the 21-day moving average, which would be an ET strategy that we use. Our last ET strategy attempt was on August 9th, and that didn't work out, and we got our heads ripped off, where it blasted right through, breaking above the previous day high, and then running toward the 200-day moving average. In this case, it's run up to the 200-day moving average, and now it's starting to roll over, and then looking for support at 4,154. So unfortunately, I think depending on where it opens, if we have a pretty bullish day on Monday, that would require the candle to open inside. The futures would have to be opening inside the previous day candle. However, if it opens up lower or equal to the close of Friday, that would be representing 4,231.50, then we would see more weakness going all the way down to the 21-day moving average. And that would set up another bounce to break through the 200. Okay, so worst case scenario, the price would just attempt a small little bounce and then move lower to 3,000, maybe retest the psychological target of 4,000 before moving higher. So these are the two scenarios that I'm expecting, and I'm leaning toward the bounce off the 21. Looking at the NASDAQ, you can see that the NASDAQ really didn't get close to the 200-day moving average and is already 80% to 70% near completing the ET setup. So that's the break of the 8 down to the 21. So NASDAQ usually acts like an accelerator, whereas the S&P acts like the velocity. And it's just a little bit, it's not that far away from the 21, but if it does bounce off the 21, we expect to move toward the 200 and then bounce around the 200, moving higher, making 52-week highs by the end of the year. The other scenario is very similar to the S&P. If it bounces off the 21 and the bounce is not strong enough, basically momentum is much lower than previous, then we could probably see a pullback to the 50-day moving average before another attempt to the 200-day. So I'm not too keen on the second scenario developing, but the first one is the most likely. As for Bitcoin seems to have a very high correlation to the NASDAQ and the S&P. However, you can see that it does look like it's decoupling because it's nowhere close to the 200-day moving average. If it was highly correlated 1-to-1, then Bitcoin would be near the 200-day moving average. However, it's not even close, and it looks like the downtrend is still intact and most likely moving all the way down to 9,800, breaking the 10,000 mark. And if that happens off that A6 right here, yeah, I'm not too sure how the U.S. markets are going to react. This Bitcoin is a big problem that is causing the markets to not make new highs, and I'm not really too sure when this thing is going to decouple. My theory is once Bitcoin reaches less than 5,000 to 1,000, there's pretty much negligible volume for it to affect the U.S. markets anymore. And I think then at that time, the U.S. markets would be able to stage a pretty strong, sustainable rally like it did in the previous rallies in 2008 from the lows. Okay, so let's go ahead and take a look at some of these components here. So Apple, you can see that Apple has a major weighting in both the index, has rocketed higher above the 200 and now looking like it's susceptible for an ET strategy all the way down to this gap fill at 165, and then possibly bounce to make a new 52 cut. It filled the gap here previously at 174, and then now it's looking like there's profit taking. And the last time it attempted to break through the 8, it rallied quite aggressively. This time it does look like it's going to break through the 8 with momentum, and there's a chance that this week we could see Apple pull back to 166 by Friday. Okay, and then the doom and gloom is this gap fill at 157. That would be corresponding to the S&P pulling back to the 50-day moving average. I think that would be 4,000. Yeah, right here. So I think if the S&P pulls back all the way down to 4,000, then Apple would be looking to retest that 200-day moving average at 160 and maybe on 157. So there could be some pretty strong selling, but I wouldn't be too aggressive on this because that looks like a pretty strong trend from what I see. If it opens just like I mentioned in the S&P, if it opens inside candle, then there's going to be another rally attempt to push it to 200, right, by the end of the year. If it opens equal to or less than the close of Friday, that's 171.52, then the ET opens up for some strong selling into Monday, Tuesday, Wednesday, Thursday, and Friday. Amazon, it had a pretty strong rally after earnings, gap and go, and then it coincidentally meets with resistance at the 200-day moving average, rolling over at the moment, and it does look like it's going to try to retest the top of that gap at 132. Probably a little bounce then a bounce maybe back up to the 200, but that gap fill is going to get filled sooner than later. And I think the average gap fill for Amazon is around 14 days. It's past 14 days and starting to roll over. So watch out for that. Boeing already broke through the ET and now looking to fill the gap at 159. And I'm not too sure if the 149 is something that I would want to go for with puts, because there's another gap here at 176. So there's a lot of gaps in Boeing, and it's probably more gaps than I've ever seen in my life, making it a very difficult trade. I think you've got to look for an very oversold condition in Boeing in order to take a position in it for a move back above the 200-day moving average at 171, which I expect to see that happen toward the last 2 months of the year. Google also has a very similar setup to Amazon from the earnings gap. So that gap is open at 107. Retest of 107 is something that is a trade setup, right? But if it's already at the 21-day moving average, so there could be a bounce. You can see that when I go through the FANG stocks, they're all kind of different. They usually, back in the day, they would be trading relatively in the similar manner, but now they're all showing almost a different characteristic. Whereas here, Amazon was trading at the 200-day moving average, Apple's trading 15% over, 7% over the 200-day moving average, and then Google is just just like 8% away from the 200-day moving average. So this is very interesting. Nvidia looks like very similar setup to Bitcoin. Okay, so Bitcoin did take a pretty big dump, and it is also well extended below the 200-day moving average, similar to what Nvidia is being displayed right now. They have earnings coming on August 24th, so I think maybe 3 days lower. It looks like it's going to try to retest that 50-day moving average. But like I said before, if it opens inside the candle, then we could see the rally back above the 6-day moving average, and then whatever happens into earnings is just a roll of the dice. Roku looks like a pretty bearish setup. It's starting to roll over. I was trying to look to roll this over, but I got caught on the green doji looking for a breakout above the 50, but it's starting to roll over and looks like it's going to retest the 62.24, and whatever happens after that, I'm not too sure. Netflix, one of the overglorified FANG stocks, is still holding up pretty well, but keep in mind it's down like a lot, the most ever in a FANG stock, and it is very far away from the 200-day moving average. It's got some major gaps from the previous earnings and some minor gaps from the previous week. So it does look like an ET has already about 60% completed. It could move lower, but be careful. Monday and Tuesdays are generally bullish, so we'll see what happens when the futures open. Shopify is in deep trouble, and it looks like it's rolling over, just like these growth stocks are just getting hammered, and it looks like it's going to go down to $27 before making any attempt to move higher. So this is a pretty dire looking chart, and it's going to look like it's going to make a new 52-week low. Best chance here is to maybe look for a little bounce up to at least $35, and then reshort it if the market begins to show the VIX spiking. Tesla is a position I have which is drawing down. It is actually holding up pretty well, and it also did the ET, so I'm expecting for a move open inside day at 893 or 890, and then reclaim that 6-day moving average to move the price back to 920. It does have a split in August 25th, so I'll be looking for this. But generally speaking, the strategy, TGIF, closes the long positions on Tuesday. So depending on the momentum that we see coming in on Tesla, you can probably anticipate that momentum by looking at the pre-market. If the pre-market in Tesla is showing green and it's up relatively up 1.5 to 2%, then that's a good sign of momentum that's going to come in on Monday and Tuesday. If it opens up flat and equal to 890, and then I'm probably going to look for a close, because then it's going to slide all the way down and maybe break through that 21-day moving average. Okay, Meta is also rolling over just like Shopify, so I don't know exactly where this is going, but my best guess would be a double bottom attempt here at 162. Microsoft is a strong stock that looks very similar to Amazon. It's got a gap fill here at 283 and a retest of the 21-day moving average at 280. Monster, this was a stock that I was really looking to short, but I had my positions into Tesla, but this thing looks like it's going down to 241 to fill the gap at 215. Disney, I had a shot on this looking for a move up to the 200-day moving average, which failed. So it looks like it's going to try to fill the gap exactly like Amazon and Google. mRNA, we took a short position back here on August 15th, and it just blew it just made such a big momentum move. I did not hold my positions. I closed it out on that same day for a 35% profit. And Bed Bath & Beyond, I'm not too sure. This is a very dangerous stock. I would recommend not trading it. All right, so thank you very much and have a great day.